Let's compare Mapletree Logistics Trust and Ascendas REIT. Which of the two S-REIT is better? Hi guys, Stanley here. Welcome to my channel. I have been investing in the stock market for over the past 15 years and have been sharing some of my thoughts on how we can all invest in the stock market in the safest possible way. So if you want to learn more about investing or just hear some of my latest research, please subscribe to our channel as we'll update it every single week. Today, let's talk about REITs, Real Estate Investment Trusts. Real Estate Investment Trusts or REIT are well loved by investors in Singapore. Many of the S-REITs are some of the largest and best managed REITs in the region. A real estate investment trust is basically a trust that owns a portfolio of properties and manage it on behalf of its unit holders. So if you own a REIT, you are owning a small percentage of the properties it holds, and you're entitled to the rental income. Some of the key advantages of investing in REIT is the stable distribution income it gives investors. A REIT in Singapore has to pay out 90% of its income every year. The value of the stock is also backed by physical properties. So generally, REITs are less volatile compared to other stocks. And in Singapore, REITs has a limit on how much debt they can have as well. In that way, it will limit some risks associated with them. Unfortunately, during the current pandemic, the uncertainty of investing in most REITs have increased as many tenants are left struggling right now. I say most because there is one sector of the REIT market that is more resilient than the others, and that is the industrial REITs. In fact, many industrial REITs have actually been experiencing good growth over this period as we see a boom in sectors like logistics and data center. Two of the largest industrial REITs in Singapore is Mapletree Logistics Trust and Ascendas REIT. How does these two stack up against each other? Let's investigate together. But first, I'd like to thank our sponsor for this video, Share Investor Web Pro. I invest in multiple stock markets, and in the past, I have to download all the annual reports of a company and run through their financial one by one. It takes days or weeks just to analyze the financial data of one company. I have hundreds of Excel sheets where I copied down all the financial data points of each company from the past. But once I started using Share Investor Web Pro, I was able to cut down that process to just a few minutes. Over the past few decades, I have tried many financial data providers, including using a Bloomberg machine. Yet, I still find Share Investor Web Pro to be one of the best value for money data provider out there. The web-based software means that I can do my research anywhere. I can easily look up to 10 years of financial data of a company at a glance and even compare a few companies together. The best thing is that they provide data for stocks across multiple markets like Singapore, Malaysia, Hong Kong, US, Australia, and even the Indonesian and Thailand market. Another feature that I use is their inbuilt screener. It is extremely powerful and allows me to shortlist interesting stocks based on my own criteria. For a fundamental long-term investor like myself, I think having a tool like Share Investor Web Pro is really priceless. So if you're looking for a financial data provider, do check out Share Investor Web Pro. You can find out more from our link below, and when we are ready to sign up for it, remember to use our promo code as well to get a $20 off your first year subscription. Now, let's get back to our comparison. When it comes to industrial REIT, Ascendas REIT is the largest of them all, managing more than 15 billion in assets. The REIT has property in 4 key markets: Singapore, Australia, Europe, and the US, with its assets in Singapore worth about 60% of the total property value. The REIT is also well diversified across 4 different types of property: business space, logistic, industrial, and data center. Ascendas REIT owns more than 200 properties, with 96 of them in Singapore. The REIT has also a long history of stable growth. It has been increasing its asset quite systematically, and most acquisitions in the past have been beneficial for its unit holders. For example, it's just announced its latest proposal last month of acquiring the remaining 75% stake in Galaxis, a very popular business space property in One North Singapore. The deal could potentially boost the distribution yield of the REIT to about 5% based on the current price of $2.95. Overall, it's a very strong and stable REIT. But Mapletree Logistics Trust is also an impressive REIT. It has a much more targeted sector focusing only on the logistic properties. It is a good thing because the logistic industry has been one of the best performing sector for the REIT market. Mapletree Logistics Trust actually saw a 22.6% increase in its revenue for its latest quarter from a year ago. Its distributable income to unit holders also increased 19% from a year ago. Given that most property owners are struggling currently, that growth is very impressive. On top of that, it has a more diversified geographical spread with property across 9 key regions instead of the 4 of Ascendas REIT. It is also more well balanced as properties in Singapore only take up 24% of the REIT total property value. In terms of geographical diversification, this is definitely a much better REIT. Overall, both REITs are equally impressive and would be hard to differentiate which might be a better investment. But luckily, using the comparison feature in Share Investor Web Pro, we can see a much clearer picture between the two REITs. Here I have the two REIT lined up side by side within Web Pro. We can see that their last done price and the price range which they have been trading across the past 12 months. What surprised me is really looking at their past return. We can see that over the past 5 years, Mapletree Logistics Trust has returned more than 111% to investors, while Ascendas REIT only managed a 30% return. That is telling me that investors are more optimistic about Mapletree Logistics Trust over the past few years. Another aspect that we can compare is their valuation. For REIT, I like to look at their distribution yield and their price to book ratio. I don't really look at their earnings, that's because of the revaluation gain of their property, which can change their earnings quite significantly year on year. Price to book value is basically the unit price of the REIT over its net asset value per share. So if the share price is lower, that will give us a lower price to book ratio, indicating that the stock might be cheaper. Looking at the two REITs, Mapletree Logistics Trust is trading at 1.5 times book value and Ascendas REIT is at 1.4. Both are very similar, but it seems that Ascendas REIT is slightly cheaper at the moment. We see a very similar story in the distribution yield. Based on last year's distribution, Mapletree Logistics Trust it has a yield about 4%, while Ascendas REIT is higher at 4.8%. Thus, in terms of valuation, Ascendas REIT is looking more attractive at the moment. The final factor that I like to see is looking at their long-term distribution per unit growth. As REIT has to fund their acquisition with new fundings, every time they make an acquisition, there will be some dilution risk to investor. So instead of focusing on the absolute growth in distribution, I like to focus on the distribution per unit. How much the REIT grew its distribution for every unit outstanding. Here we can set the data up in Web Pro and we will be able to see over the past 10 years. And here we can see that the distribution per unit has stayed quite the same for Ascendas REIT and also Mapletree Logistics Trust. Maybe we can expect that both REIT will be able to maintain that and grow their distribution slightly in the future. Based on what we talked about today, we know that both are large and stable REITs. Ascendas REIT is more diversified across their asset type, while Mapletree Logistics Trust is more diversified geographically. Both have very similar growth, but Mapletree Logistics Trust has a significant better return over the past 5 years. That has also pushed its valuation slightly higher than Ascendas REIT. And because of that, to me, Ascendas REIT seems like the better deal right now. Moreover, it might also benefit more as the pandemic comes to an end. That could mean that other property types like business space and industrial factories can recover even more, potentially giving Ascendas REIT slightly more upside as well. But anyway, what is your choice between the two REITs? Comment below to discuss. And if you want to study more on REITs and any other stocks, you can also check out Share Investor Web Pro, where you can gain access to financial data of thousands of stocks. Remember to use our promo code here to save the $20 of your first year subscription. As always, my name is Stanley. Till we meet again, invest safely. Oh, don't forget, if you like the video, smash that like button.